No future for house trade. Find out why. Hey everyone, let's talk about something that's been bugging a lot of us: buying a house. It seems like it's getting tougher for young people out there to afford a home these days. At the same time, the house prices? They're just going up in no time. Makes you wonder, doesn't it? How are the house prices climbing when so many people can't even afford them? Saving up for a 20% down payment on a house feels like a fantasy. Rents are shooting up like crazy, and owning a home, which should be a solid financial step, feels more like a dream. A home is not just a roof over your head, it's a way to build value over time in something you can eventually call your own. Plus, believe it or not, in most places, paying a mortgage can be cheaper than paying rent. So, owning your place could mean you're saving money now and setting yourself up for a better financial future. But here's the real deal. According to this report from Redfin, only 21% of homes sold in 2022 were what you'd call affordable. That's a huge drop from 60% the year before. This means in just 1 year, loads of homes that were once within reach are now way too expensive for most of us. It's a tough pill to swallow, and it's made housing affordability worse than ever. So, what's going to happen to the housing market? You'd think if people can't afford homes, prices would stop going up, right? Well, it's not that simple. You don't really save up to buy the whole house up front. You save for the down payment. Even though the price tags on homes are way out of sync with what most of us earn, people are still jumping into the market because they're only saving up a part of the house's total cost. This situation might actually get tougher before it gets better. The first big issue is this gap between what we can afford and the reality of buying a house. Despite high prices, the industry makes it seem possible to buy a house even when it feels out of reach. Instead of saving the full house price, people are scrimping and saving just for the down payment, while the cost of buying a home keeps racing ahead of our paychecks. Believe it or not, having a home with a 30-year mortgage in many areas can be more wallet-friendly than renting. This means that if you manage to buy a house, you're setting yourself up for a more financially secure present and future. Unfortunately, though, for about 75% of you watching, owning a home probably feels like a distant dream because it's just too pricey. Let's look at the numbers. In 2022, only about 21% of the homes on sale were affordable for most people. That's a huge drop from 60% just a year earlier. So, within a year, a whopping 2/3 of homes that were once within budget have become way too pricey for the average person. It's no surprise then that experts are ringing alarm bells, saying housing affordability is at its worst level in history. This crisis isn't just a statistic, it's a harsh reality for millions trying to find a place to call their own. Wages haven't kept up with house prices, but a 20% down payment is only 1/5 of the total cost. So people are still entering the market. For example, the average home price rose from $230,000 in 2020 to $330,000 by early 2023, a $100,000 jump in just 3 years. The average American earns about $59,000 before tax, but after taxes, they're left with around $49,000. If they saved an unrealistic 70% of their take-home pay, they'd still be no closer to buying a house because house prices are rising just as fast. The National Association of Realtors found that the average down payment for first-time buyers was just 7% and 17% for repeat buyers. So, even though houses are earning as much as people, the entry barrier is being lowered. Zillow's got an interesting solution for those struggling to save up for a house. They're testing out a 1% down payment loan. Here's how it works. You, the buyer, only must put down 1% of the house price. Then, Zillow steps in and adds another 2% as a grant at closing. And guess what? This extra bit doesn't need to be paid back. It's like a little boost to help you get over the initial hurdle of buying a house. This approach is making the entry point into homeownership more accessible, despite the ever-climbing house prices. But don't forget, while the down payment is crucial, it's only the beginning. The real challenge is keeping up with those monthly mortgage payments. It's like getting your foot in the door. You still need to walk the rest of the way. Another reason house prices keep rising is because no one's selling. Home sales in America are at their lowest in a decade. Homeowners with low-rate mortgages aren't selling because they don't want to take on new loans with higher rates. Plus, many people moved during COVID and are not ready for another move. Also, The average homeowner stays in their home for about 13.2 years. After a recent surge in home buying, more Americans are just settling into their new homes, meaning fewer homes are being put up for sale. This drop in supply keeps prices high. Here's an update on the housing market. Investors are still very much in the game, especially those institutional big shots investing in real estate investment trusts, REITs. Think of REITs as mutual funds, but instead of stocks, they're all about real estate. They gather cash from lots of folks to buy up properties. They're super popular these days because even if you can't afford a house yourself, you can still get a slice of the property market by investing in these trusts. But here's the twist. All this investment money pouring in is also pushing property prices higher. But wait, there's a bit of a change in the wind. Investment buying is slowing down. Some of the big players have even hit the pause button on their purchasing sprees. This could signal a shift in the housing market's direction. Now, if you've got money in a REIT and are thinking about bailing, remember that selling your shares is the straightforward way out. No need for the trust to start selling off its properties. It's a bit of a complicated picture, but getting the hang of it is crucial if you want to understand what's going on in the housing market today. And talking about real estate investment trusts, REITs now. If you've got money in one, you might want to listen up. Getting out of a REIT isn't about making the trust sell off its properties. It's simpler than that. You just sell your shares. That's it. No need to cause a big stir with property liquidation. Now, for a little extra insight, wealthy families are getting pretty savvy at keeping their properties in the family. We're possibly moving into a time where fortunes don't just last a lifetime, but for many generations. It's like setting the stage for family dynasties that could go on for ages. Take a look at families like the Rockefellers. They're not just rich. They've managed to stay rich for a really long time. It's like they've cracked the code on making wealth last way beyond the usual span, setting a new trend in how family fortunes are maintained. So, there you have it. The housing market is a wild ride, but understanding it is key. Keep learning, stay updated, and who knows, you might just navigate this market like a pro. If you want more insights like these, don't forget to subscribe to my channel. Give me a thumbs up, and I'll catch you in the next video.